Hey, hello there, everybody. Today is Monday. It's a brand new week. I apologize for not being here last week, but with all the travel I did, New York and then out to Colorado, something got me bad, and I was in bed for a while. So you could probably still hear it in my voice a little bit, a little nasally, but I am back. Again, apologize for last week, but thank you all for joining me today on our live stream, our Minds of Markets live stream. Yes, we are live down here on the floor of the CBOE, Chicago Board Options Exchange, in the S&P 500 options pit. Stark contrast today as to what we saw last week. Last Friday, we had triple or quad witching, if you will, where you've got option expiration, futures expiration, on index expiration. So that typically is a really busy day, a really volatile day. Friday actually wasn't. If you can kind of think back through the weekend a few days, Friday the market was pretty muted, but the week itself was pretty busy and pretty volatile. Today, not much going on at all. Volume is very, very low. S&Ps are up. Dow is up pretty big. NASDAQ is, hovering in the red just a little bit. As I look up on the big board here, there's under 750,000 S&P 500 contracts, futures contracts that have traded so far today. That is pretty light. On any average day, we get about 1.5 million. So that is pretty light right now. And, I don't know if you can hear behind me, and certainly ask me questions if you can in the chat, everybody, because I'll answer them live for you. But I'm not sure if you can hear behind me, but there really is not a lot of activity going on. But let's talk about some market recap. What's going on so far today? Let's take this over here. Earlier in the day in the S&Ps, here in the SPX, there was a lot of premium selling. A lot of premium selling for this Friday's expiration. Now, this Friday's expiration here in some of the indices, especially in the SPX, this is a quarterly expiration. So in addition to the triple witching, which we had last Friday, this Friday is a quarterly expiration. So there's a ton of open interest out there. I believe it is the biggest quarterly expiration ever on the board here. And what we're seeing is earlier this morning, let me check here, a lot of sales, a lot of selling premium expiring this week. So for instance, there was an order on the 54.75 puts. So we're not even talking about that much below the market, just slightly below at the money here. 6,000 of those were sold below the bid. So when they trade below the bid, folks, we know that that is a selling order because obviously, no one's going to be able to buy there with their posted bids. So someone is coming in, they really wanted to unload 6,000 of those. Those expire this Friday. In addition, 10,000. Actually, let me make that 20,000 of the 50, actually 10,000 each of the 54 and a quarter and 53 and a quarter puts traded this morning. The 5,400 puts, there was how many of those? 6,000 of those. So lots of sellers trying to capture premium for the week going into this quarterly expiration. Now, might be slow today, maybe we're going to be slow tomorrow or so, but got to remember that going out to the end of the week here, guys, we've got a massive, massive eco data release Friday morning. Core PCE, the PCE index, personal consumption expenditure index. That is what the Fed really dives into, looks into, and hangs their hat on to determine what is going on with inflation. If we can remember a couple weeks back, and that seems like an eternity already, a couple weeks back we got the latest CPI report, which came in lighter than expected, which excited the markets. Didn't excite the Fed so much because they're still in this wait and see attitude. But if we get this PCE report this Friday that also comes in either in line or slightly below expectations, market's going to like that. The market is really going to then price in the probability of a rate cut in September. Right now, that probability is about a 62% chance. Depending on what that number comes in on Friday, we could see that raise up to 75% chance. So I would expect us to get pretty busy as the week gets going here with rolling positions, either out of those quarterlies into a new position, putting new positions on ahead of the expectation of that PCE release, whatever it might be. Philip, hello, thank you. How you doing, man? If you got anything you want me to cover, please let me know. So overall, again, today, the NASDAQ kind of heavy here. You have a couple big winners. Apple, Microsoft were rallying big here. Let's pull those up on the screen. Here is Apple is up a little over 1% today. I know Microsoft was rallying nicely early on. It's actually unchanged right now. Micron, one of the semis, and the semis are under some pressure today. Micron was the one outstanding that was up by actually pretty big this morning. And now it's up, what are we, 50, 60 cents or so. It was up about $3.50 earlier. So I think there's a lot of profit taking right now, with the incredible run that the market has made, especially in the semis. Obviously, Nvidia, which is under pressure again today. I would not call this a sell-off by any stretch of the imagination in the semis. If this was something that maybe was going to be sustained, we'd see it with a lot more veracity. We'd see volatilities really picking up, and they're just not. Vol is really, really low across the board. End of last week, we saw some of the commodity space get hit. Not oil. Oil is actually trending higher, which sucks for all of us at the pump here. Robert Rossi says no volume here, Mike.
Vicky means in the market.
Oh, Robert, are you talking in the markets or are you talking about my volume here? Let me know because we want you to hear me. I think you're probably referring to the markets. Thank you, Mike. Which yes, there is very little volume in the markets here. But Micron, Nvidia, Taiwan Semi, yeah, they're struggling a little bit here, but not any volatility. Going back to the commodity space, crude, yes, crude was is kind of on a run here, which again, especially being the summer months here where they use a different blend of gasoline, it costs us more, sucks at the pump, but gold, silver, these things got hammered end of next week. Copper, they all got hammered at the end of next week. I think really setting up an opportunity in gold and especially silver. And let me highlight silver here for a second, guys, because this is the one I'm really focusing on, that I've got my my antennas out there, my alerts out there. So here's a 6-month silver chart right here, guys. And if you could see this red line right here, right above the yellow line I just drew, that's the 50-day moving average. And you can see us coming right back down here to that 50-day moving average. If we get there, I want to jump in. Now, whether we do it with buying a call spread, selling a put spread, which probably won't happen because vol is never very expensive. There's never a lot of premium in SLV. We'd probably be looking at some upside there. So out of all the commodities, SLV, the silver ETF, that's the one I am looking at the closest. Let's answer Gilbert. Gilbert, what do I think about Google running into earnings? Well, I'll tell you what. Let's take a look at it. I know earnings aren't for about another month or so. I think they're around July 23rd-ish or so. So what do I think about it running into? That's a long time, right? That is a long time, Gilbert, between now and in a month from now. We may see the week ahead of that, or maybe 10 days ahead of that stock running up. I wouldn't play Google right now for just a run into earnings. What I do like about Google, if I put this on a shorter time frame, this is a 3-month chart here. Okay, you can see it's run into, whoops, let me clear that. It has run into a brick wall 3 times. 1, 2, 3. It has run into a brick wall 3 times. What I would look for is if Google can break that, now you got a runner. Now there is no resistance above whatsoever. So whether that times with earnings or not, that's really what I'm looking for there. I do think longer term, Google, Microsoft, they're for sure going to be plays for the longer term. But listen, when we trade, when we're talking about things here, what's our longer term? My mindset, just like what the podcast is, Minds of Markets, and one of our products, Market Maker Moves, it's the mindset of a market maker. So my mindset is literally, minute by minute, day by day. To think of anything out a week or two, to me, that's an investment, a totally different type of trade than just kind of trading how we do it. So you got to always keep that separated, the investing side from the trading side. And, that's why I have an investment manager for my own portfolio, as you guys should as well. We are not, we are absolutely not investment managers, brokers to manage your money. We're here to teach you how to trade. And that's always with a short-term focus on it, whether it be day trading or swing trading, whatever it be. So gotta definitely really keep our understanding two different things. But it's a great question, Gilbert. And if you ask me again in a week or two, as we get a little bit closer, maybe we could take a little fine tune look at it and look for a position there. All right, does that make sense? And again, if anybody else has any questions here, please let me know. I'm happy to go through charts, happy to go through anything you guys would like to hear from me. How's the sound, everybody? How's the sound working out here for everyone? If you can give me a quick shout out in the chat, that would be great. A little nervous about that right now. I want to make sure that it's good. Mike says it's good. Okay, there we go. Thank you, thank you, thank you. Okay, so since we've been talking here, S&Ps have come off about 10 points or so, pretty close to the lows of the day. But when I say lows of the day, we're down 2-3 points. So, again, I think that this is all just people getting positioned for the end of the quarter, getting positioned ahead of the big number coming out Friday. And then, we talk about big numbers and, eco data that we all have to keep our eyes and ears on. Then next week, we get the June jobs data as well. Is Snowflake hitting a bottom? Okay, that's a great question, Don. Are you asking because we put out a signal there, or just because you happen to be looking at the charts? Let's take a look at Snowflake. Okay, so if we look at Snow, this is a 2-year chart on here, guys. Let me make this a little bit bigger for everybody. Whoops, that's not the right. There we go. Okay, this is a 2-year chart. Okay, so look at what we have here. Again, over 2 years. Support, 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 support here. Well, this is where we're at. Again, okay, we are right at that support area, which is why we put out a signal. Okay, now, can it go lower from here? Absolutely it can, but there is a ton of support. Now, the other thing I want to show you in Snowflake is not only is the stock at major support here. Let me make sure I'm doing this right. No, of course not. Come on, there we go. But look at implied volatility here, guys. So regardless of the type of position that you would put on in Snowflake, regardless of whether you look at the technicals, fundamentals, you're bullish, you're bearish, you're neutral. If you see a chart like this, and this is the same 2-year chart, but what we're looking at here is option volatility. We are at bare bones bottom sale prices, if you will. So what tells us is, again, regardless of whether you're bearish or bullish, directionally, you would rather put a position on where you are buying option premium. You're buying volatility. Again, don't get confused with buying or selling volatility with buying or selling direction, right? We've got direction delta, we've got volatility vega. Okay. Well, if I see vol down here, I've got some pretty high confidence that maybe it's not going to ratchet up as I think that it will based on what we see here. But I've got really high confidence that it's not going any lower. That gives me the opportunity to really set up a position buying time. Buying time means buying option premium, buying volatility, which is exactly what we did today in the position in the signal that we put out, which was right here. Well, I just erased it again. One of these days I'll get better on the computer here, guys. Thanks for your patience. Okay, if you look here, what we did is we sold an option that expires in 2 weeks, which is also inclusive of the July 4th holiday. Remember that. That's a big one. As we get closer to expiration, when there's a holiday, a day off, the Greeks, the option Greeks, they don't know that it's a holiday. So that theta is still going to be working. So that's the option we're short. That's a good thing. And then we bought 3 weeks later. Okay, so we have this mildly bullish spread, but we also bought time. So does everybody understand that concept that when you see volatility down like it is, again, regardless of the type of directional position that you want to put on, bullish, bearish, neutral, you would rather put on a position where you're buying time. Time's on sale, time is cheap. Okay, does that make sense to everybody? Okay, great, great. I will be happy to take any other questions on stocks you want to look at, but something that I want to talk about today, which I think is super, super important, and let me bring up one of these charts here, okay, is this right here. And no, this is not going to be a conversation about politics, okay? Not something I want to discuss here. All I'm going to present to you are the facts, okay? This is not a red or blue market. We're agnostic to that. All I want to bring up to you are the facts right now. So far this year, okay, being a presidential election year, the market has really outperformed other presidential election years. You know, the S&Ps coming into today were up almost 15%. They're just slightly off their all-time highs. The Dow is just slightly off its all-time highs. The Nasdaq up until the last couple days had been making new all-time highs daily. But right now, with 4 trading days to go in the first half of the year, the S&P is on pace for its best first half performance during an election year in almost 50, excuse me, in almost 40 years. Okay, just over 40 years. Okay, but what does that mean is going to happen the rest of the year, right? What does that mean? I mean, as we get closer and closer to the election, we've got a lot of, I won't use the S word, a lot of stuff going on, right? Besides the election, the uncertainty around that, we've got multiple wars overseas, Ukraine, the Middle East. We've got the inflation battle, potential Fed rate cuts, and and last but not least, and I think this is the one that so many people are focusing on right now, is kind of the limited breadth in the market. What do I mean by that? Well, the market has been fueled this year, honestly, by Nvidia and some other really high flying AI stocks. We need to see that broaden out. We need to see, and in this rotation we're seeing over the last couple of days from, some of the NASDAQ out to the Dow, which had underperformed. That's actually a good thing. That's actually a good thing. But we really need to see that broaden out because I don't believe that the market can sustain these levels the rest of this year and beyond just on the backs of AI. Whether it's NVIDIA, whether it's, the new Apple, whatever it is, Dell, yada, yada, yada. So there's a lot of things that can really, really, really affect this marketplace. Okay, so we've got to be aware of that. And volatility going out, it's already starting to tick up. If you were to look at VIX futures, the volatility curve in the VIX going out, you would see, yeah, we see right now VIX is trading 13. Okay, that's low. That's historically really low. It was almost at a 52-week low just last week when it ticked right down under 12. 13 is really low, but it's not 13 if we go look out in September, October, November. In fact, the October futures are at about 18 and a half right now. So that tells you, and that's normal. That is normal, guys. That's not, out of the ordinary, but that tells you that, yeah, there's concern for what may happen leading into the election. Okay. But again, we're traders, not investors. Some of you may be looking longer term, and that's totally fine. And I'm always willing to give my opinion on longer term or if you want to protect a portfolio, but that's not what we do here. We trade. Okay. So for trading purposes, for us coming in every morning, doing our thing, going home, coming back tomorrow, the important thing right now is the inflation data. This Friday's inflation data. Okay. Um, and the market needs to see that too. With the way that the market is trading up at these all-time highs, S&P price earnings ratios are getting pretty stretched. And I don't know how much more comfortable the market or how much longer the market can stay comfortable with the 10-year trading, in the 450 range. I know it's down at 430 or so right now, but the market has gotten really acclimated to rates up at 450. I'm not so sure it can stay there. Going back to the performance or outperformance of the market so far this year in an election year, so 15% gain roughly for the S&P. Okay, now information technology sector. So again, you're talking about the NVIDIAs of the world, stocks like that. They're up 29% the entire sector for the year. Communication services sector, that's up 25%, which means that the rest of the S&P is lagging quite a bit. So the other 9 S&P sectors, they're up only about 9% for the year. Okay, that's got to broaden out, guys. It really does. It really has to broaden out. Someone asked, why is 2020 not in here? I think 2020 is not in here because of COVID, because that was such an outlier. Okay. Now, I'm going to scroll through this, guys. Again, I'm not taking a political side here. I'm just showing you the data. I am just showing you the data. Okay. And I'll be happy if you guys email me or post in here that you want this info. I'll be happy to give you a link to where you can find this. Okay. We can look at S&P results, and these are end of year results. Okay. Depending on what happens to an election. Okay. Average return, Republican elected over 15%, Democrat elected 7.5%. Okay. Now, let's take a deeper dive into that. Okay. 23 elections since the S&P 500 has begun. 19 of the 23 years, 83% positive performance. I mean, I don't know that that is so unlike what a typical year in the S&P is. Okay. Now, when a Democrat was in office like we have now, and if they win again, that return bumps up to 11% from the 7.5% that it was. If a Democrat's in office and a Republican wins, That year averaged just under 13%, a little bit lower than when a Republican stayed in office. Okay. And then there's this one too. This one breaks it even down further, looking at not just who's in the White House, but who's in the House of Representatives, who's in the Senate. Okay. You guys can read, the charts here and see what's going on. And again, I'll be happy to forward this to you. This is actually really, I think it's interesting stuff. Now, would I take a market strategy? Would I take a position based on this? Probably not, right? I mean, I think this year is such an outlier, and so many things can happen because of the climate we're in and because of those other things we talked about, like geopolitical risk, inflation, et cetera, et cetera. But it's always good to have this kind of info in your back pocket here. Again, do you think we should expect five for the summer for the overall markets? Don, do I think we should expect it? No. Do I think we should prepare for it? Absolutely. And I say that because volatility is so low. Okay, you guys probably sick of hearing me preach this. When volatility is low, and especially when we're at, market highs, near market highs, there's no reason not to buy some insurance. When you talk to your insurance broker, and we know we've all been getting annihilated with our premiums, right? Whether it's your health insurance, auto insurance, homeowners insurance, doesn't matter. We've all been getting annihilated. So when you go for your renewal, you're going to shop around. You want the best price that you can possibly get. Well, insurance is on sale. Market insurance is on sale right now. And you want to have it before you need it. There's this old saying, buy it when you can, not when you have to. So if you spend a little money buying some market insurance, whether that means buying downside S&P puts, triple Q puts, maybe buying some VIX calls on the upside, and if it goes to zero, is that going to be the worst thing for you? I think that you just need to look at your overall portfolio and say, all right, what kind of risk am I willing to take here of a downside move? Because if we do start to make a downside move, okay, if we do sell off 5-10%, your insurance premium is going to be really, really expensive to buy at that point. Okay. Oh, what's going on here? Look at the hands raised here, guys. Let me give you a view of the pit here. Got something going on here. See the real live trade that most people don't think happens anymore. Here's the real live trade. I didn't really hear what the trade potentially was, but that's like the first bit of action since we've been on today. Normally it's a bit busier. Um, So, guys, let me know the types of things that you want me to be discussing. Okay, because every day I want to come in with something more than just a market recap of what, like I did at the top of the hour here, of what's trading. I want to give you some information that you may not have known otherwise that might be relative to your trading account or your maybe an IRA portfolio. I would love the feedback and hear from you what sorts of things you want to know. I will tell you, we will be doing this again on Wednesday. And Wednesday, we are going to have a special guest down live with me on the floor. We've had guests on before, and they've been through Zoom or Skype or whatever. Charlie Moon, guys, for those of you that follow Charlie Moon, he's going to be right down here standing next to me in the S&P 500 pit, and we'll be going at it with each other here, and he'll bring his expertise, tell you what's going on also. So that'll be on Wednesday, guys. That'll be a nice highlight for us. All right. Let's see. What do we have here? Yes, information, please. Okay. I always learn something new. Kim, thank you, thank you, thank you. I appreciate that very much. And yes, for those of you that are interested, I am doing a live webinar tomorrow night, okay, at 7 o'clock Central Time, 8 o'clock Eastern Time. There's a link there. You guys are more than welcome to join, even if you're already subscribers. If you're not a subscriber to one of my programs, great. It is very, very informational. Pass that link on to friends and family. That'll be at 7 o'clock tomorrow night live. It's a good thing it's tomorrow night because I think tonight we've got Game 7 of the Stanley Cup Finals. What, for all of you hockey fans out there, what a comeback Edmonton has made, huh? That's first time in history. That should be a fun one. And I'm not a huge hockey fan, but that should be a fun one to watch tonight. So, all right, everybody. Really appreciate you guys all being here. Thank you so much. Appreciate you taking a half an hour out of your time. I'm going to head back up to the office. Minds a Market live stream, guys. We'll see you again Wednesday here live with Charlie Moon. Have a good one, everybody.